Welcome to today's market report. European stock markets edged higher on Thursday as investors digested a generally positive fresh round of corporate earnings, both in Europe and on Wall Street. DAX in Germany traded 0.4% higher, CAC 40 rose 0.2%, FTSE 100 gained 0.4%. Global shares have surged in recent weeks, led by expectations that successful rollouts of COVID-19 vaccines around the world and hefty stimulus packages, especially in the US, will unleash pent-up demand, and the corporate sector is starting to offer up evidence to this effect. Publicis stock rose 3.4% after the world's third largest advertising group returned to organic growth for the first time since the start of the pandemic, fueled by high demand for digital advertising in the United States. ABBN stock climbed 3.5% after the Swiss engineering firm lifted its revenue guidance for 2021 after an upbeat first quarter. Recently floated Deliveroo stock slipped 0.7%, despite the food delivery company saying its orders more than doubled in the quarter to end March in its first trading update. In Germany, meanwhile, shares in Vonovia rose 1.6% to their highest since early January after the country's highest court ruled that the Berlin State Senate's attempt to cap rents on the apartments it owns was unconstitutional. The bank sector, often seen as a proxy for the health of the wider economy, had started the ball rolling in the US on Wednesday. Goldman Sachs posted a record first quarter net profits as it capitalized on record levels of global deal-making activity. Wells Fargo, the fourth largest lender in the US, recorded bumper profits as it reduced bad loan provisions and got a grip on costs tied to its sales practices scandal. On the economic data slate, German consumer prices rose 0.5% on the month in March, rising by less than 0.7% levels seen the previous month, while the French equivalent rose 0.6% on the month, up from a flat level in February. In the US, investors will study the latest weekly report on the number of Americans filing first-time claims for unemployment insurance, while March retail sales data are expected to show a strong uptick in consumer spending. Oil prices drifted on Thursday, consolidating near one-month high after Wednesday's strong gains as US stockpiles data added to signs the demand outlook is improving. US crude futures traded 0.1% lower at $63.06 per barrel after climbing 4.9% during the previous session, while the Brent contract fell 0.1% to $66.50 per barrel after gaining 4.6% on Wednesday. Gold futures rose 0.6% to $1,747.20 per ounce. On the FX front, a moderation in vaccinations and political tensions have weighed on GBP/USD, but range support at 136.70 to 137 has held with scope for range trading rebounds. GBP recent softness, notably versus the euro, coincides with a slide in vaccinations since Easter, partly due to a reduced vaccine supply from India, while alternatives are yet to be approved. However, the rollout remains above prior targets, and weekly vaccinations are still around 3 million per week. Regional issues have also resurfaced in recent weeks. Unrest in Northern Ireland over the post-Brexit trade deal may soon be resolved as renewed EU-UK talks progress. Additionally, Scottish and local elections on 6th of May have raised concerns over whether a strong SNP outcome might trigger another once-in-a-lifetime independence referendum. Disruptions to the national, not just the Scottish, economy would set back current recovery prospects and undermine GBP. As GBP softened, GBP/USD found solid support in the 136.70 area. However, rebounds are likely to be limited until there is clarity on the 6th of May elections. Euro-dollar keeps pushing higher and already trades at shouting distance from the psychological 120 mark. The recovery from year-to-date lows near 117 on 31st of March remains well and sound so far, helped at the same time by the recent break above the 200-day SMA at 118.99. A break above the 120 hurdle should open the door to extra gains in the very near term, with the immediate target at the 100-day SMA at 120.50, while the dollar index was at 91.7, a 4-week low, on the back of yields pullbacks. This is today's market news. Thanks for listening. We'll see you next time.